What is happening, everybody? Welcome back to another video. Today we're going to be talking about indexes in the stock market. If you didn't catch my last video, I talked about the 5 easy ways to get started in the stock market when it comes to shaping your mentality and physically choosing a broker and actually making an account and getting invested. So if you didn't check that out, go check that video out. It'll make this one make a little bit more sense. To start off, I'll basically explain what an index is to make it easy. The easiest way I can explain an index is probably in my own words. An index in the stock market is going to be a stock you can invest into, but it has a whole bunch of different companies combined together to make that one stock. So what we're going to be looking at on the charts on my Robinhood is the S&P 500. And the S&P 500 is Fortune 500 companies put together to make one stock. And so when you invest into the S&P 500, you invest into a bunch of different companies. So that's why I chose to throw indexes in my next video to make it easy for somebody starting out to already have a diversified portfolio. And that way, you can buy a couple indexes to start off with and a couple other different companies, and then you can start really mixing a lot of different stuff in your portfolio and generating wealth that way, because we don't want to have all oil or all real estate or all consumer goods. You can't have all that. You just have to throw everything in together. That way when something else is down, something else is up. You're never going to lose everything unless we go into a financial crisis again, which does happen. And you just have to say, okay, we're going to be down for a little bit, but eventually the market will bounce back. So the index I'm going to show you on my Robinhood is going to be the easiest one we just talked about, the S&P 500, And we're going to jump right into that. We're going to look at the 1 day, 1 week, 1 month, 3 month, 1 year, and 5 years. So we're going to look at all that so we can see the slow and steady growth of a index. One more thing I'll mention before we split screens and I show you all that. An index is not going to be a fast return. So that's the only downside of it, in my opinion. They're going to take, I want to say a couple of years at least when you invest in index, that you're going to want to see that slow growth happen. And that's why we always, say patience is key in the stock market. You have the patience, and patience pays. We'll say it over and over again, patience pays. So an index is going to be that slow growth stock you want to get into in the beginning. That way, you can max your time out with it. So I'm going to split screens, and we will look at the S&P 500 so we can get some visuals and understand on how it moves. All right, so I have the S&P 500 pulled up on Robinhood because I love Robinhood. It's easy and simple to go over. And the ticker symbol for the S&P 500 is going to be SPY. So looking at it today, just giving you quick information on it. Today it's up $1.93. We'll see what it's on the week. The week it's up 48 cents. And looking at the month, it's up $12.84. So this is how it's going to become visualized as a long-term investment once we keep going with these times. 3 months, looking at $20.59 it's up. 1 year, it's up $111. And then looking at the 5 year, we're up $220, which is crazy. I mean, this stock was an absolute animal since COVID, because these Fortune 500 companies, really adapted and stepped up to our world situation. But looking at our 5 year, this almost looks a little bit too aggressive for me after COVID, and I'll show you why. All right, so looking at the 5 year on this, looking at the way this stock was moving, it only goes back to 2016, but we will look at it and how it's moving. So it was moving very steady and slow all the way up to 2018. It spiked, and then they had a sell-off. So that's normal. It kept going, and then a little sell-off right there. Then it moved back up steady and broke that high back in 2018 where it spiked. When it broke that high in 2018, you can see that we had another sell-off, actually a big sell-off. So looking at these sell-offs, I mean, you're never going to be able to get that this direct point right here where it reversed, but you can get close to it. Like you can buy in, you know, right here, and you're going to see some red, and then it'll reverse and come back up, and you'll see green. Or some people can get really lucky and get that, but it hardly ever happens. Or you can catch it on the way up. This is usually the best time to do it, is catch it on the way up, and you'll get along for the ride. So we were steady and moving straight up until then, and this like seems a little bit fishy to me, like how, I don't know, you can see how it was steady moving, and then before COVID, like it started like kind of moving real fast before it had that huge dip. So that's almost a little bit weird and odd to me about the S&P 500. I'm not even going to get into conspiracies or anything like that, but it's a little bit crazy how it started really like moving fast before we had the COVID dip. So this right here, March 16th, 2020, when the rumors became true and everybody decided to sell everything off because they were scared. Is exactly what happened with the S&P. You know, the big dogs dropped out because they wanted to keep their money. Didn't want to see any red, and they probably bought back down here because they knew how. Look at that dip, though. This is by far the biggest dip the S&P has took. Like, I want to say almost in a decade. So it took a dip right here, and then it just kept on trucking. Kept on trucking after that. Look how fast it moved up, though, which is kind of like eye-opening to me. If we're looking at March and then we see how fast it moved up, I mean, we're definitely due for a correction. And what I mean by a correction is when somebody talks about a correction in a market, they're looking at a stock pulling back before it continues to move up. So giving y'all examples of a correction. So we're pulling up, little correction right here. Pulling up, little correction right here. As we continue to move up, the stock pulls back, so it's normal. And what that'll do is shake off a lot of weak hands. Meaning if you're not a true investor and you're scared to lose your money, and you're not in it for the long term, because that's the mindset we need to have, people are going to sell off on these little pullbacks right here, and they're not going to make as much money as they should. Just like when it dipped right here, people were scared and they sold off. So a lot of people sold off down here, sold off down here, sold off down here, and some people may have even got caught in down here and sold off and lost money because they invested right here, you know. So it really pays off for holding for the long term and investing what you can afford to see red. Because I don't want to say you're going to lose all your money with the S&P 500, because it's just not likely one of them stocks that's going to get delisted when you have the top Fortune 500 companies. But there is going to be always a financial crisis in the United States of America, 24/7, 365 days a year. But this is a prime example of a financial crisis right here. Everybody panics. Stock market starts tanking. It's a wonderful opportunity for investors. Why I call it a wonderful opportunity? This is where you want to buy in, right here. We buy into that, we're up here. We're either selling off right there because that's astronomical gains, or you can hold that for the long term. Honestly, if I were you, that would make it, minimum S&P 500 5-year hold minimum. I just love it for the long term. It was just moving very nice before we had all these issues. But like I said, guys, we're going to look for a pullback soon. And if you haven't bought into the S&P 500, look for one of those pullbacks to make some money. It should be coming shortly, I feel like. We're definitely heading towards some type of a market dip. We've been seeing a lot of red lately, but nothing's really dipped, in my opinion, hard. So there's times where it dips hard, and when it does, you got to have your buying power, your cash on hand, ready to get in on some good positions, because that's where the positions are good when the market dips. You don't buy high, we want to buy low. We buy low and then we sell high. And I also got to put the disclaimer in the video that I'm not a financial advisor, just my opinion on certain stocks and certain ones that I go with. I just share my opinion and love to do so. So that's basically going to be it for the S&P 500. We really focused in on this stock and how it moved. So you can see the way an index is going to move very slow and steady. When it doesn't move slow and steady like we see right here, We got to open our eyes and say, whoa, hold up. It's going to be a pullback coming soon, and an investment opportunity is what we like to call that. I'll basically wrap the video up right here on indexes. Very short video. Not really much to explain about indexes. They just are what they are. That's just going to be an easy way to invest your money for the long term. You're investing in 500 different companies once again. S&P, one of the most favorite companies, or sorry, favorite indexes to invest in. You know, Warren Buffett mentioned it decades ago that you need to invest in the S&P 500. Just one of the moments I'm wishing I was old enough to even be in the stock market to listen to that dude. But it is what it is. There's always gonna be opportunities out there, guys. Always gonna be opportunities in the stock market. Thanks again for the last time. That's gonna wrap up the video. I will be posting weekly once again, educational videos, and then soon we'll be doing some stock call-outs. If you watched the video, thank you so much for watching, and like and subscribe. Leave a comment on some suggestions for some future videos. Peace out, guys.